Hello and welcome to KYC. I'm Sharad Dubey and with me is Anushi Vakharia, and today the company's KYC is going to be Patel Engineering. Interesting name. A lot of news flows also coming in regarding their, I think, the fundraise and also an important order win as well, roughly 800 odd
Right
crore.
issue of 500 crore and then 800 crore worth of order wins also. So it's an interesting company that we are looking at and at the right time as well, right?
Well, exactly. And the stock had taken a beating as well, but significant volumes coming in, Anushi, and that is what actually piqued our interest as well. But there are other important questions which need to be answered, and that's why we are getting this company here. First one is, how will this 500 crores rupees rights issue be used? What will be the usage for it? Will it be for new order wins or anything in the hydroelectric sector? That is something we'll be watching out for. The second question is, Anushi had mentioned the amount also. They are decoding the roughly 800 crore order from Saidax Engineers. And what will be the implications? What will be the timelines going ahead for this? Third question is the demand inquiries from Ahmedabad, especially with the Commonwealth Games announcements coming in. This is a very interesting one. And I think it's the urban structures is what some company is supplying. So that's something we'll be watching out for. Debt reduction, that's a concern for any infra company. Then what will be that going ahead? Of course, the numbers which we saw in FY25 and H1, they were on the reduction side as well. And lastly, but the most important is the order book guidance segment. Where will the important demand trends look like? Will it be the hydroelectricity segment, irrigation or tunnel? These are the largest revenue contributors when we judge the company. But overall, what are the key actually about the company? What will be there, which will be focusing on, Anushi?
So let me go right at the start. Now, this is a company that was founded in 1949 and was headquartered, in fact, in Mumbai is what we are looking at. Now, it has been a player in engineering construction segment, as well as that it has completed over 350 projects is what we are seeing. It is in the civil engineering business. If we just have to classify that, they're into dams, bridges, tunnels. So we are looking at all of these key aspects which are there. Along with that, they've also been in construction works related to roads, the piling works and industrial structures as well as what we are seeing. So currently, if we just take the product portfolio or rather the project portfolio in account, 50 ongoing projects which are on hand. This is across 14 states that we are looking at. And on the international side also, they have a presence in Nepal as well. So that is also an interesting bit that we are looking at. But it's the segment-wise performance also that is an important aspect to keep a track of, with hydroelectric right at the top, 62%, almost 62% of the contribution coming from that. Irrigation is the next big contributor. 20% of the mix that we are seeing is from irrigation, while tunnels and roads, we are looking at a mix of around 7% and 2% respectively. But the growth lever going forward is going to be their focus in pump storage projects is what we are seeing. That is something that the company has focused on, considering the targets of the government also to increase that particular space. So that is what we are seeing in terms of the segment-wise order book. But Sharad, if we take the client-wise order book in picture, we are looking at central state government. Most of the contribution is from the government side is what we are looking at, while international has about a minuscule mix of around 1%. So it would be interesting to question if there would be a change in terms of the mixes. Will private sector mix improve going forward is something that we should be asking.
There's a huge B2G risk involved.
Exactly, yeah. So that is also something that we need to keep a track of. And this is why we've also emphasized on the net working capital days which are there. So currently, if we take H1 FY26 in account, we've seen some bit of that reduction coming on cards. But how would even FY27 or at the end of FY26, how that would shape up? 125 is the number of days that we are looking at. It is like the other infra players also on the higher side is what we are seeing. But with more focus towards private side, if that could change particular is something that we should keep a track of. But also just want to talk about the order book also, because if we look at the order book, now they have an order book of around 15,000 crore. This is at the end of the first half that we are seeing, which implies a book to bill of around 2.9 times. So that's the kind of figure, but it from the peaks of around FY23, it has gone down. So what's the kind of sustainable book to bill ratio? It's something that we need to question on, because it was a 5x multiple before.
And now just one question, the book to bill ratio, could you just give us the definition?
So
what
it is based, so this would show the execution part and the revenue visibility which is there. If suppose your order book is around 20,000 crore or so and your revenue is X amount or so, then you just divide these two numbers so you get a better sense on what's the kind of visibility that we are looking at. So from 5x, we are looking at a 3x figure. So that while that shows that there is revenue visibility going ahead, it's the sustainable range that we want to look out, considering that in the hydroelectric space, the company has a huge bid opportunity around the likes of 34,000 crore or so. So that's an interesting aspect that we are seeing. Apart from that, the company has been in focus on the back of its right issue note that we are looking at. 500 crore is the size that we are seeing. Just a bit about this also, if we are looking at that, it's the right issue price is going to be at 27 per share. So that is what we are seeing, and record date is going to be December 4 for this one. Along with that, the company has also received new orders worth about 800 crore, as you mentioned right at the start as well.
Well, that's a pretty interesting update coming in, two updates coming for Patel Engineering. But coming back to the show's format, Anushi, for our viewers, just I'll give you the example of 8 rating parameters where we judge a company in a KYC. This includes income statement, balance sheet, cash flow, return ratio. These are the first 4 parameters. After that comes in shareholding, how it has actually moved around with FIs, DIs in concern, and also the street cred, which is nothing but the stock returns coming in, be it the 1-year basis or the last 5 odd years. The valuations also very much important as we compare the company with its peers, whether it's expensive or not. And last but not the least is the outlook segment, which is very much important. And based on these 8 parameters, we give the KYC rating. But the first one will be income statement. Very interesting to track, especially for an infra company. So what are you taking from there?
So if you just look at the 3-year picture and even consider the first half, what we are seeing is a 3-year revenue CAGR of around 15%. But considering the first half performance, you're looking at a revenue growth of 7%. For FY26 also, the company expects to maintain the revenue figure at the likes of 5,000 crore or so. So the growth in particular for this FY26 is not that encouraging. However, the margins have remained on the consistent side. It's a 14 to 15% of a profile that we are looking at, and they want to maintain this EBITDA margin going forward also. Net profit also, the profit has seen about a 56% of growth, while this first half they've seen about a 20% of a growth. So considering the revenue growth, which has comparatively gone down, it could be attributed to these order inflows and the execution part of it also, but how that would shape up and whether there would be acceleration in this is something that we should be watching out for. So hence we've given this particular metric a neutral this time.
Anushi, for an infra company, there is going to be always a lumpiness, execution issues would be there, the cash flow issue will definitely be there. But most important thing is how they manage it in a balance sheet.
Right.
So that's why let's get the balance sheet numbers up and see whether they even out any kind of volatility which we see in the income statement which Anushi has mentioned. Net, the borrowings, that has actually come down, and that has what caught my eyes as well. We were mentioning that earlier, that was around 1,603 crore rupees for FY25. If you see on the screen, that has come down, not significantly, but yes, 1,543 odd crores for H1 FY26. Looking at the cash bank balance, that's a good number. That's a significant 50% jump coming in the last 6 odd months. 609 crore is there when it comes to the cash bank segment, and the net debt, that's roughly, you could say, it has come down almost, you could say, by 20 odd percent, 934. High working capital is always there in this kind of businesses, but net, the way they have managed the balance sheet, that is strong. So I'll be giving a thumbs up for this.
Okay, so that's on balance sheet that we are seeing. But coming to cash flows, now here we've given this a neutral rating. Of course, now if you just look at the cash flow from operations from FY24 to H1 FY26, we've seen a shift in terms of where this number is concerned, and this is on account of receivables also that we're looking at along with inventory days. In FY25, there was a big difference with regards to these two particular metrics versus FY24. H1, while there was some bit of an improvement, it is still on the lower side that we are looking at. Net cash flows also at the end of the first half stood at 139 crore. But with the company now bringing a right issue to bring in more cash flows for their projects going forward, if there is an improvement in this metric is something that we should be watching out for. But hence, for this particular time frame, considering how the 3 periods have been, we've given this a neutral rating.
Anushi, the return ratio, that's a cause of concern. I'm just seeing the numbers. Generally, when you look at an ROE or an ROCE, these numbers you expect in mid-teens or high teens as an investor. But the company has tested the patience of the investors, and ROE, ROCE, look at them, that has actually come down. FY25, it's in a single digit. Return on equity, there was a substantial downtick in the stock as well. Return on capital employed, however, they are on the positive side. That's around 15 odd percent, and that is decent for an infra company, the ROCE numbers. But ROE has been a dampener, and that has been why I've been actually giving a thumbs down when it comes to the return ratios.
Okay. So that's on the return ratios that we are seeing. But coming to the shareholding pattern, now this is an interesting one, considering that there would be a change from this from the next quarter itself, considering that there's right issue, there's more of that equity share capital base forming in. So there would be some bit of that dilution in terms of where the promoter stake is being held. So right now what we're seeing is a 36% of a promoter stake holding, which has come off from the 36%, 39% that we are looking at. If you look at FII share from March 25, even that has come down to 3% versus March 25, which was 5% or so, while DIIs have continued to maintain this stake of 5% in this quarter as well, just like the last three periods that we are looking at, while public shareholding in this one has been roughly 48 to 52% is what we are looking at. So considering this, we've given shareholding a neutral rating.
And the street cred, that's also an important aspect to judge a company on. It's largely we can see for 1 month, 6 month, and even 1 year basis, this hasn't given much return to the shareholders. Year to date basis, there's a 30% downtick coming in. So if you have taken positions in the company, maybe in the last 1 year or 6 odd months, it has been on the losing side. But the 5-year basis, if you look at these numbers, that has been a decent performance coming in. 5-year share performance, that's roughly doubling. That's a strong movement, 177% up. So if you're a long-term investor, it has rewarded you, but short-term or a positional investor or even a trader, it has been on the negative side. To balance things out, I'll be giving a neutral rating.
Okay, so neutral is what we are seeing for street cred as well, but valuations is the big story that we are seeing, and with a lot of these correction coming in just what just Sharad described in the 6-month or 1 year period, are valuations now attracting is the key question. Now, if you just compare Patel Engineering with the other infra players which are there, like HG Infra, JK Infra or KNR Instruction, we are seeing that it is majorly less than how the other players are doing so far. And so that seems on the positive side, but do note that there's also concerns with regards to the growth aspect of it with the revenue. While there would be pickup in FY26, the story right now is that we are giving this one a positive, considering that it is on the cheaper basis.
And the last parameter, Anushi, is the outlook. Outlook going ahead is very much important. 4 important triggers. This company might be a beneficiary for Ahmedabad Commonwealth Games as well. 2030 recent announcement was there, and we had seen a lot of Gujarat-related infra players also doing well. But remember, the company has urban structures business as well. That is what actually caught our eye. The long-term debt, if you just separate the working capital numbers, that is down by 10% if you compare FY25 with H1 FY26, and currently 50 ongoing projects are there across 14 odd states, and post monsoon the larger orders are expected to be announced in H2 as well, and that is something which you'll be watching out for. For net, I will give a +1 or a thumbs up when it comes to the overall outlook. But you must be wondering, what is the total KYC rating actually looking like? So let's just go ahead, Anushi, with the important parameters where we judge the company. First of all, of course, the income statement comes in. That's been largely neutral. But balance sheet, that management has been on a strong strength. Anushi pointed out the cash flow segment that was doing well, but the ROE numbers, that was our cause of concern, and we've given a thumbs down for that. Moving ahead, if you look at the other parameters, shareholding, street cred, not much, but valuations have been cheaper because of the correction we have seen this year, almost 30% down in the markets, and the outlook is also strong, especially with that Ahmedabad Commonwealth Games announcement which came in as well. So we will be watching out for those as well. But totally KYC rating, we have given 5 out of 10. 5 out of 8. And Anushi, largely this is average rating which we give generally here. But very interesting thing about this Commonwealth Games angle which has come in, that's why the stocks which are not even in conversations, they have also picked up.
Absolutely. Now a lot of focus is to build the infrastructure there, so that brings focus on a bunch of sectors. Infrastructure being one, there's real estate as well. How it would shape up is something that we should keep a track of, considering that they are into civil structures as well. If there was more new orders in these 3-4 year period that we are looking at is something that we should be seeing. But considering current order book which is there, which is roughly at the size of 15,000 crore that we are looking at, and a 3x book to bill ratio, if there's a substantial increase in this is something that we need to know. Along with that, they also have a 34,000 crore worth of an order pipeline. What is the success rate of this? How would the conversions help the company? Is another interesting aspect as well that we are looking at.
And one more thing, since I track technicals also, on Friday the volumes of the company was the highest levels you could actually expect. And this is since its listing, the company was listed in 1995. That was pretty much interesting, and the debt levels also, the management commentary is strong when it comes to its reduction. But Anushi, the concern always remains is why the stock fell 30-odd%. Is it the business impact or is there something else? Because there was, you can say, a change in transition of the second generation coming in as well.
Well, that is there. It's more about the revenue visibility which is there. In terms of debt reduction, as you just spoke
Sure.
about, they're seeing about 100 crore of a reduction there as well. So let's just bring all of these aspects together and bring the management on board itself, right?
Correct. Joining us is Kavita Shirvaikar. She is the managing director at Patel Engineering. A very good afternoon to you, ma'am. And first of all, the question remains is...
Good afternoon, Sharad. Thank you so much.
Yes. The first question is, especially with the Ahmedabad Olympics being announced as well, I mean to say Commonwealth Games 2030, there seems the infra space is buzzing a lot and company is dealing with urban structures as well, as I remember. So I would just like to ask, will we see this pickup happening in the realty space, infra space on this?
So, Sharad, thank you for having me on the show. See, I will say we are currently focusing on our core sector, which is hydro irrigation tunneling. As we see, there is huge opportunity available in the sector. As you mentioned that there is an opportunity in data center, in other real estate, urban infrastructure sector that we will do as and when the opportunity comes.
Kavita, just want to understand. So while there would be focus on that, the key growth driver is going to be hydroelectric space. In that particular area that we are seeing, 34,000 crore is the worth of pipeline that we are looking at. So from this 15,000 crore of order book that we are seeing, just want to understand the new order inflows which would be there. What is the kind of conversion that we are seeing from this 34,000 crore of pipeline?
So we have a diversified order book, a strong order book of around 15,000 crore, which is 60% is coming from hydro. This, over and above, we have submitted bids more than 30,000 crore of projects, which is also diversified and aligned with our core sectors like hydro, irrigation, tunneling, and other infrastructure projects. Our traditionally conversion ratio is 20%. Here also we expect in a similar line. Over and above, another 20,000 crore of worth of projects, which we have identified for the bidding, which will come up shortly.
Okay.
And yeah, sorry.
No, please go ahead.
So we are saying ki be going forward, H2, now we have said momentum has started. We have got LOA, recently we got LOA in mining sector of around 800 crores. So there also we are opening up the diversified and we see huge opportunity there also.
Execution going to shape up with all of these factors which are there, considering that you have a strong order pipeline with hydroelectric being the key contributor to this. Your book to bill ratio, if you see from the FY23 levels to this H1 in particular, has come down from 5x to 3x, which continues to show resilience. But is this the new book to bill ratio that we are looking at? Just want to get a picture in terms of new order inflows and the execution as well.
So since you mentioned that book to bill ratio has come down, so it shows, it demonstrates our execution expedite. See, I would, before coming to the book to bill ratio, I will say ki we have expedited the execution across all projects. Subansari, we completed major milestone. Two turbines, wet commissioning is already done, and final commissioning is will be shortly. We have achieved record break progress in our Maharashtra project, Sitco project. More than 750 meter tunneling we have done in a single month. So book to bill ratio has come down to 3. Going forward, we will be continue to focusing on our core sectors, which is hydro, irrigation, tunneling. So blended, I would say it will be 3 to 4 years going forward book to bill ratio.
So blended book to bill ratio will be roughly 3 to 4 times in the next 3 odd years. That's right, Kavita?
Yes.
And Kavita, this important question arises is that there is a rights issue also coming in. That's roughly 500 odd crore rupees. What will be the application for this?
So mainly it would be utilized for debt reduction. And so going forward, we can utilize internal accruals for the growth. It will further strengthen our balance sheet. As you have seen, our rating has continuously improved and now it is A minus. And we see going forward, to further improvement.
All right. Uh, of course, one more question is the debt reduction part. You are just out of this 500 crore, there is a debt reduction element to it. But overall, the net, if you just spell out the numbers, how much the debt numbers are there and the net debt numbers are there. We have seen, Anushi had taken out the data as well from FY25 to H1. There was a slight dip in the reduction of debt. But if you would just point out the entire debt reduction strategy, maybe the timelines.
So our current debt is 1,500 crore, which divides into two parts. 1,000 crore is working capital debt and 500 crore is term debt. So term debt is repayable in next 3 years. So we see eventually by monetization of asset. See, current quarter we sold one land parcel, which is around 130 crores. So you see March end, you will see the further reduction in debt, and over and above with the right issue, it will further reduce our debt.
So
So
Kavita,
every year we have a target of debt reduction of by 200 crores, 150 to 200 crores through monetization, which I would say we are on track.
Kavita, got that. Just want to understand the overall breakup that we are seeing of this rights issue of 500 crores. So while debt portion is supposed to be on the minimal side, in which areas in particularly you are going to be utilizing these funds? How would the cash flow also improve going forward with more of these funds coming in picture? Want a deeper perspective on all of these aspects.
So right issue, we are coming up with 400 crores. So we are seeing ki around 60-70% will be utilized for debt reduction. 25-30% will be utilized for the working capital and general corporate purpose. So eventually at March end, our debt will further come down, and going forward, whatever internal accruals can be utilized for the growth.
Kavita, you had mentioned about the new growth avenues, and data center is something which you had spoken earlier in the show. Just like to give us more details about these new growth avenues, because you have been all throughout the show stating that you will be focusing on your core business. But the new growth avenues, what are the plans, any announcements? Have you kept any capex for these new places like the data center? Because there's a lot of buzz happening in these new sectors. So like your view on the new growing sectors where you will be focusing on in the next 12 to 18 months.
So next 12 to 18 months, as I mentioned earlier also, we will be focusing on our core sector. This data center and other large government buildings, which we are working with a few PSUs, we will know eventually how much we are going to take it and not based on the projects available for the bidding actually.
Okay, so I believe there was a 15,000 crore of a big project which was on table. Want to understand the progress on that. There were talks that it may come in the next 3-4 months or so. So what's the update on that one? And also for FY26, what would the revenue guidance be? Would it be more on the flattish side with a consistent margin profile that you've had and a subsequent pickup in FY27? So two-part question over here.
So as you mentioned, large, like our 30,000 crore bids under evaluation includes one large project also, which is around 15,000 crore plus. It is a dam project in Arunachal Pradesh, Dibang Dam project. It is a 2 crore cubic meter concrete. See, let me tell you, we are the pioneer of RCC dam. We have constructed first RCC dam in Maharashtra. So I can say that we are well positioned with financial also and technical also to explore these kind of
Well,
opportunities.
thanks a lot, Kavita, for giving the perspective. Overall, the company will be focusing on the core business. Thank you very much, Kavita, for joining us at KYC. But let's move on to the key takeaways which the management has stated during our entire conversation. And the first and foremost, Anushi, the management is still bullish on their core business. And over the next 12 to 18 odd months, they will be focusing on that. But let's see the first growth avenue which they have spoken about. That's data centers. That's pretty interesting to actually look at. And the second one is the book to bill ratio, which we had mentioned and explained our audience, is going to be between 3 to 4 times. That means the lower side is still decent. That means the conversion is good for an infra company. And last but not the least is the company is on track to reduce 200 crore debt reduction each year. That's what they have stated. So that's something which you'll be watching out for. But that's all for today. Thank you very much for watching the KYC. Stay tuned to NDTV Profit.